One of the most difficult challenges in a stock market is to make sure that we invest intelligently. And I think all of us have this challenge that we really do not know what we are getting ourselves into when we get into the stock market. And that's why we need experts who know their way around and could take ahead and safely help us navigate the dangers that are there in the market. So today, as usual, we have Ram back again to come and enlighten us with his knowledge of the expertise, which is the stock market that he has. So good evening, Ram. Nice to have you back.
Good evening, Gren. Welcome viewers around the world and in India.
Yeah, so after the success of the last video that we had with this very great response, we thought we should take it one step more and really get in more deeper on what are the dangers first that you have by indiscriminately investing in the stock market. So can you just take us to what you think from your point of view, Ram, is the normal dangers that fall for a guy who just walks in without knowing what he's getting himself into?
Great, Gren. See, many of us face this problem. Not only new investors, even the people who've really invested their money for quite some time get carried away. The main problem we face is basically we don't do a proper analysis of the script we have in hand. See, we just get carried away by the sound. We always call it noise. So we have something called noise vibrations in stock market. So when there's a lot of noise when the stock makes, we get carried away. Now the maximum, like after March 24th, after the lockdown, you saw everybody of us know the resulting what happened. The stock markets crashed and it went to an all-time low of 7,511 points. That was the low which we really seen in the recent times. And when the economy opened back in May, it slowly started building up. So now what happened is from May till now, whoever was working, even a working professional, every fellow sees this as a mode of investment. Yes, sir, I put it on the stock market, I will get my money back. Definitely, yes, my friends. Today the market is good and you will get returns for the money you are investing. But whether this will be continuous or whether it is sustained is a big question mark, and it is not a question mark, it will not. See, today we are over, we call it an expensive valuation. That's what we are sitting on. The market is overvalued. We are sitting on a huge expensive valuation. And if we tend to keep our money invested right now in the same way, we will lose in the long run. See, people have already invested for 5 to 10 years and keeping their money in the scripts, they will make money. But who've just entered right now, thinking that they're going to make money and keeping themselves invested for quite some time from now is going to be a big problem they're going to face. So how do we really go about this? First, as I've always been reiterating to all my customers, even in the previous video, please do a small bit of analysis. I don't want you to go deep inside. See, if you want to go deep inside, come to us. We are there. We will do it for you. But as a basic investor, do some little bit of homework before you invest in that particular share. Basically, what you can do rather than doing what not to do, I can tell you what to do because that's easier. You have just do basic 3 or 4 points. Basically, just study about the company, how good about this company is, how good about the management is, because we all know we invest in good companies. Say, for example, always I used to talk about the aviation sector and other things. Let us take a new sector, for example, metals and Hindalco. Hindalco has been managed by Mr. Kumaramangalam Birla, and everybody knows the background about Mr. Kumaramangalam Birla and the family he comes from, the reputation he has. So this is one family which can never go wrong. So you can blindly invest your money in Hindalco, but just see the price range where you're investing. That's the only point you've got to see. Hindalco is a very, very strong share when it comes to the metal sector. So the same way we have certain scripts in every sector, which is very, very strong. Basically, again, Reliance Industries. We all know the success story of the Ambanis, right? Starting from their Mr. Mukesh Ambani's dad, the late Dhirubhai Ambani. So all these people have been really successful. And the chances of these people going wrong is very, very minimal. So you can definitely invest in these people's companies. Just see where you are investing, which point you are investing in. Because you shouldn't invest at the higher levels. Always, every script, let us understand, even in the good days, there will be a small dip. That dip you will have to invest. You will have to wait, basically like a hungry cat ready to pounce on its meal. Just sit down and just wait for the prices to come down. Once it comes down, just pounce on it and just get your portfolio, get your script into your portfolio and let it be there for some time. And these scripts over a period of time can never make you be wrong, or never let you down. So that's the kind of thing you'll have to do. Basically, first you see the management, how the management is. If the management is very strong, go ahead. Because these people, they have been doing business for ages and generations together. The chance of them going bust is very, very minimal. And second, what I would always say is, always when you go into a company, just see how much is the promoter share of the company. The more the promoter share, the better the company is, because he does not like to give the profits away. He's eating all the profits by himself. So normally what we do is on a quarter to quarter basis, we see whether the promoter shareholding has increased. And a lot of companies after the pandemic, my friends, let me be frank, the share pattern of the promoters have increased, which means his vested interest in the company is there, and he knows that the profit is much bigger. So he is buying shares from the public. So it's also a very good point which you can take when you're going to invest. See, I'm not telling you to go into the real technical stuff where you'll have to really sit and break your heads for hours together. These are all just basic things which you'll have to just see and just go around investing. And the third thing which you can see is, in this promoter share, how much has he pledged? Because normally when we go for an expansion or something, these promoters, they pledge their shares and take money for their expansion schemes and other things. So how much of the promoter share is pledged in this, you'll have to see. So basically, we say not more than 10% or 15% should be pledged. If it is more than 15%, see, of course, there's nothing right or wrong in this. Everything is perfect. But to me, if the pledge is more than 10% or 15%, I will not basically go into that stock, basically. I would refrain from that, because the exposure to the pledge is more. And we have some companies after the pandemic where the pledge percentage has come down, which is again another vital and key point to look into, which is again another good parameter, that the pledge is coming down, which means the promoters are buying back their shares from the pledged market. So all these are certain points which you'll have to basic points. You don't have to go really deep inside. About a script, when you select a script. And once you select a script, go into the bigger macro level and see how the sector is performing when compared to the script. There might be some sectors which are really going down, but the script might be going up. That's a huge plus for the bonus for the script, because the whole sector is not performing. Even in that non-performing sector, this particular script is performing is a beautiful thing. You can really go and invest in that, because there's something negative going on, but this company is still performing above all those negative issues. But still, the sector is also performing and the script is also performing. Be a bit careful when you're investing. Don't get carried away, because it's easy to just get carried away by the momentum, as it was. This is the noise which we call, because there'll be a lot of noise around the script. A lot of people telling that is coming, this is coming, he's got such a big order. Just confirm all these points before you invest, and then go and blindly invest in a share once all these are there. You can just pick up the point, and then what I would do is, of course, this is into the finer micro levels. You will have to take, if you're a trader, basically like me, looking at short-term profits, take a 10-day horizon and see how this script is performed in this 10 days. You can see the variations, the highest point and the lowest point. So within this, you can invest somewhere and you can keep yourself invested. You're a long-term investor. You'll have to take a bigger data. You'll have to go in for a 5-month or 3-month data and see how this script is really performed for you to invest. Basically, what we tell people is, when you're selecting a script, see just these 5 basic points, go invest your money, you'll be safe. I think this will be the basic for you to just select a script.
That's very enlightening, Ram. I never thought that so much that goes into understanding what you're investing to when you go into the stock market. I thought you'll go there, you'll see a good situation that the market is doing well or it's doing bad, and you just invest money. But it looks like there's much more effort and time and more application of research and analysis before you really go and put your money into some script. So that's very interesting. Now, I have a question that I've always partially understood, but I want it maybe to be discussed more for the public on this call, on this video, is that when they say bubble, right? How different is that as a situation when you're investing into a bubble or coming out of a bubble, right? Compared to a normal market situation? Does that drastically change these terms that you said when it comes to the the dangers of investing in a market, or is it just going to be a situation for a temporary event and it would move away?
It's a huge risk, Gren. Let me be clear, because it's a very good question you asked. Right now, we're sitting in a huge bubble. Because as I told, from 7,511 points on March 24th, today we're sitting at 14,600 points, which is almost double the value we have been seeing. And this is something which is unexpected, unprecedented in the stock market history. So we are sitting on a huge bubble. So what happens now is that's what we just get carried away. All the people are investing money. Let us understand one thing, my friends. This market, which has gone from 7,511 to this range, is purely because of certain investments. For example, one of them is the FIIs, the foreign institutional investors. For example, from May, when the economy opened till date, they have invested almost 2,12,000 crores. It's not a small sum in the stock market. 2,12,000 crores is something huge. And just imagine a scenario tomorrow where these FIIs just pull out this 2,12,000 crores and walk out of the country. It's not going to happen overnight, but I'm just giving a scenario, the worst case scenario. What is going to happen to this market, which is there at 14,600 points? Automatically, it's going to come down to 10,000 or 11,000 points. So a 3,000 point difference, you're just looking at a 3,000 point fall in the stock market. But when that relates to you, when it comes to your stock or your script which you're holding, it will be almost 70 to 75% of the value of some scripts. That'll be the huge beating you will take. So you would have invested at 100 rupees. Finally, you would see the stock at 25 rupees once all this is over. And you would be sitting and cribbing for what you've invested. I would not say the stock is wrong, but the moment we invested was wrong. So you'll have to wait for a huge time of your value of time. Because, yesterday I went to one of my corporate friends. There I had seen a small caption which was very nice, which I had come across. It was written, time management is equal to life management. So it was very clear, it was written there. So the time which you spend in the stock market is you're losing income there as well. You're staying invested, your money is lying idle. Of course, you will get a dividend at the year end, but it'll be minimum or meager when it compares to the returns you get in the stock market when you keep investing and pulling out over a period of time. So if you are a trader, let us be clear, this is the over expensive valuation which you're seeing. We'll have to be very careful when we are investing. That's why I always keep telling my friends and my clients, always invest on dips. As I told you, like even 10 minutes before I shared with you, the lion always pounces when it will be ready to pounce. When the deer just goes pounces and takes its meal. The same way we'll have to keep our eyes open always with this. At 9 o'clock, we open the screen till 3:30. The screen runs in front of you with the scripts which you want. See when it's really dipping, and at the dip point, you just go invest and come out. And once you know that it's really going to build up, your profits are for sure. So this is the basic point. When the bubble is there, a small pin can just burst the bubble, and that is it. Finish. We come crashing down. See, we will be flying, as you say, the balloon, the heated balloon. Once the balloon is gone, we come crashing down to the earth, knowing nothing why we have lost our money or anything. Then we sit and analyze that we've invested in the wrong time, not in the wrong script. So you'll have to wait. Say now you've invested and the script has come down. You'll be waiting for almost 1 year or 2 years for the script to again make up and come back to the levels for the present level we are in. But if you would ask me in another situation where the bad markets were there, of course we could tell very easily that will come up in 15 or 20 days. But now it's been a totally bull run. We are really skeptical about this particular phase of the market. We have to be really, really cautious when we invest money. So that's what we always tell. Take the help of experts, even if they charge you a little bit. Don't worry, pay the charges, because of course this depends on model to model. Where I charge my clients on a profit model, only when they earn a profit they pay me, and when they incur a loss I pay them. It's vice versa. So it's a give and take policy. So this is what I do. But based on your portfolio manager, how he's designed his business model, sit and talk it out with him. Because let us be clear, friends, when people are investing money, you don't have the time of 6 hours a day to sit in front of the laptop or the TV or CNBC TV or Z Business and just see the scripts running through. Because in CNBC and other things, you would see only the major scripts running in the bottom line. But the real mid caps and small caps, they hardly run. So go to a portfolio manager, get your what I would say is your investment sorted out, your capital, say this is your capital and this is what the returns, set your expectations straight, go ahead with them. Even if it charges you a little bit of money, don't worry about the money because you're paying only a part of your profits. And my sincere advice would be is to retain your profits in the market today. That's the kind of return we're seeing because you want compounded interest. So when we say compound interest, the profit also should be there in the market. So always what my concept would be is the money you have saved, take a part of your saving and put it into this. Don't bring your money which you're living on and put it into the stock market. That's one big mistake which we do. So it's, for example, if you save 10 or 20 lakhs, bring in 1 lakh. So you're not bringing in everything from your savings and putting into this. Test yourself into the market. See how you're performing, how your portfolio manager is performing. And if everything suits you, slowly increase the portfolio and go. That's the way it has to be done. See, as we always say, being trainers and coaches, you put a seed and the next day you want an apple, doesn't happen anything. Slowly it has to go, the process has to go. You water it, you manure it, and then it comes to a plant, small plant, and then it grows into a big tree. Then only the apple comes. So the process, the due course you have to follow. You can't just jump in tonight and become a millionaire tomorrow morning. That will never happen. Even a stock market, because of course, if you're that risk taker, the returns will be more. And that we have a separate segment for which we can trade. The intradays and other things are there, but normally I don't touch all this instrument. Mine is a very clear methodology where I do. So just go to a portfolio manager, sit and sort out. If you think you have the time, no, I have the time. I can do things by myself. I can follow the script. Perfect. This is the, as I told you, the few points which you'll have to see: the management, the promoter's shareholding, the pledged shareholding, all this, and over a period of time, how the stock has performed, say in a 15-day horizon. If you're a short-term investor, if you're a long-term investor on a 3-month horizon, go and invest your money. That's it. These are the 5 basic points you need. You will get a feel of it, of the script which you're going to invest. And slowly, when you start doing this over a period of time, you will become the master of it. That's simple as it. Because you start reading 20, 30, 50 scripts, you will know each script, how it differs from the other one. So perfect. I'm not talking about financial statements. I'm not talking about price volume chart, other things, because that's too technical. That we will go on the deeper later sections where we will really talk about technical stuff. But right now, let us keep it simple. These are the things which we'll have to follow.
Oh, it's very interesting, Ram. I mean, it sounds pretty simple what you're saying, but I know how difficult it is to put it into practice because you are going to go and have to practically spend. Sorry.
Today also, when we go and select a script for my clients today, we really sit on a knife edge because, as I told you, it's over expensive. It's overvalued. We really think twice before we invest. We see a lot of technical stuff today and we invest. Just going by the fundamentals today might catch you on the wrong foot.
That's actually what was going to be my next question. So, should I invest when the market is going up, or should I invest when the market is going down? When is the right way to invest?
See, Gren, like as I told you, every script has its own ups and downs, the dips and the ups, we call it. So when it's dipping down, that's the time to buy the script. So how do we know when the script is coming down? How do we normally tend to see this, how the script is coming down? As I told you, take a 15-day average. You will know that on one particular day, this was the price, this was the price, this was the price. So basically, we'll be able to average out the price. So in the 15 days, for example, I can give you again with the big companies which we always talk about is Reliance Industries. So for the past 15 days, Reliance Industries has been trading between 1890 and 1950. This has been the range of Reliance Industries if you want. So if you want to invest in Reliance, this is the range. So there was a period, of course, not even very long back, just 20 days or 25 days back, where Reliance was at 2,000 rupees. So now if you've invested in Reliance at 2,000 rupees, you're stuck. You will have to wait till it comes back. See, this is one of the most awaited companies and most after-thought companies, I would call it, because everybody knows about the success story of this company, and it has gone from some nowhere to somewhere, and these people are really doing a wonderful job. And the management is, as we all know, they've collected huge investments by overseas investments they've collected. They're sitting on piles of cash. They're reducing the debt. That's another big point in Reliance. They're reducing debt by a considerable amount. So all this put together gives a very rosy scenario of Reliance. But what is the price we buy Reliance at? That's a question we always tend to ask. Because Reliance has gone to 1830 also, and it's gone to 2200 also. People who have invested in 2200, 2100 levels today have to wait for a long time for the share to go back to that level. That was the day when we actually termed Mr. Mukesh Ambani as the richest man in Asia. Because the shares were worth 2,100 rupees, he multiplied by the number of shares he had, he was the richest person. But today he's not the richest person, he's been dethroned by a person in China because the share value has come down drastically by 100 or 150 rupees from where we were. So basically, that's why I always say this simple analysis, Gren. I don't want you to go into the technical because technical is you'll get a perfect range where you're about to invest. But rather than going to the technical analysis, what you can do is just take a 15-day average of Reliance. There are a lot of sites which give you the 15-day or 30-day average of the share price. You go, it shows every day what price it was trading at. So just see the trading price of this particular script and accordingly decide. See, you will get an average. So based on that average, decide. You will have to have the conviction levels. See, when you're a new investor, you will never have the conviction levels because you don't know the mantra of investing at all. You have been investing for quite some time. Yes, you have some conviction levels. Go by the conviction levels. Don't go by market sound because that's a wrong sound which we get at times and we tend to, because again, which I've really seen, even with portfolio managers like me itself, we enter at the right point, but we exit at the wrong point. See, we exit much before than the time we're supposed to exit because we think we are safe, we have made profits, we'll exit out. That's again another point because one is the entry point. We always talk about the entry points. But what about the exit points? Entry, we have made it right. If the exit is wrong, you're making a loss in the profit you're going to make. See, you're destined to make 20% profit, but you're cutting yourself to 67% profit. I've come across this many times in my life. I tend to be overcautious because it's my customer's money. No, we have made 6-7%. Let us get out of this counter. But after I cut it, I would see slowly this counter going up, and end up with 15-20%. I said, and I think of myself, I've been a fool today, I've lost money. But that is one way of thinking. The other way is we think, yes, we have made a good decision by quitting it right before the things could start. It could go either way. So we take a call on it and we decide.
No, I think that's the important question, right, Ram? I mean, how far do you want to push the envelope before you start making losses? I think is the $1,000,000 question. So, as you rightly said, you can equate a loss of profit as a loss, or you can say that you came out at the right time before you could have gone to the peak, and then you would have had a downward trend where you may have lost money compared to what you made, right? That's the risk factor of the stock market, which I think is reasonable as an assumption when you're thinking of playing it safe versus being overly aggressive. I think that's, as you said, a gut feel of when to get in or get out. But that's one important point which today you brought, which I never really came to my mind. We always talk about when we should invest. We never really realize that the actual profit is when we exit. And we don't really keep that as a focus in our mind. That is very, very valuable and very, very powerful what you said today to me. At least it struck a very strong chord in my mind that I've never ever thought as an investor. I've been going into the stock market also in the past. I always kept looking, okay, when is the market? How is the market doing? When should I put money in? And taking money out has always been, okay, market is doing like this so much, I got so much of return, let's get out of the market. It's never been a conscious thought about how is the stock performing now? Am I at the right time getting out when the market is on a downward trend or an upward trend where I could maybe capitalize more and get more profit than what I even have made till now? So that is really a revelation to me at least. So that's really good. So Ram, if somebody comes to you for and say they want you to take their portfolio, what is your criteria to accept a customer?
See, basically, Gren, see, we're very clear. I'm looking at professionals like doctors, engineers, lawyers, people who are not able to manage the money but have some little bit of savings and they're sitting on it. And second, I would talk about is the senior and middle level management of a company. See, these people are working 8 hours, 10 hours a day, slogging and really earning money. At the end of the day, they put it in some debt instrument where it doesn't multiply even to the inflation, which we talk about. So normally what I do is I encourage these people to slowly invest with me. So basically what I do is I start off with a portfolio of 1 lakh or 1.5 lakhs or 2 lakhs based on their comfort levels. And I build up the portfolio from there. And I have had a lot of clients who started with 1.5 lakhs or sitting at 6 lakhs today. Because what I do is I do it as an SIP. So the starting would be 1 lakh, 1.5 lakhs. Because below that, I cannot do a portfolio. I would be, I would not be able to give you the returns which I promised. That's the frank thing. I can give you returns, but not at the range which I promised. And second, if you give me 1.5 lakhs, I can really plan a portfolio to a certain level. And above that, every month you keep on adding to that 1.5 lakhs, so it becomes an SIP. You also don't feel the pinch of it. And second, what I'm doing is you're giving me only from the saving. See, as I told you, I don't want the money which you've kept for your expenditure. See, as I told you last video, Gren, it's always income minus savings is expenditure. That's the mantra today. We always put the savings first. And from that savings, give me a little bit, a part of the amount. I will show you returns. You can slowly keep increasing your money. But of course, Gren, again, I'm telling you this 1.5 lakhs, I will stop it very soon because I'm having a count of clientele. I can't manage 100 people's 1 lakh. Yeah, of course, it's 1 crore to me, but 100 people separate accounts going and logging in calls is a huge task for me. I'll have 10, 15 people below me doing this job. So that I will be restricting at a certain point of time. But now, right now, since even I'm in the growth phase, I can accept 1.5 lakh portfolios and I can take it forward. But going forward, I would be restricting my portfolios. So the earlier, the better for me as well.
That's interesting. So that gives me a chance to invest with you, so we can start and take this forward. So let's talk after this call, and let me also jump in the bandwagon before you start stopping taking people at the lower end. So Ram, we've almost come to the end of this video. So thank you so much for your time. It gave me a lot of pointers today about the stock market that honestly I would have never even thought about, and something that we understand why we need specialists of portfolio management like you to really handle our stocks and shares so that we do not get into traps that will end up making us lose money. So thank you for your time. Thank you for really sharing knowledge so freely, which other people really restrict themselves to make you come to them. I'm so glad you're ready to share your knowledge to people to utilize it as much as they can. So thank you so much. And thank you for sharing your knowledge, especially.
Thank you, Glenn. And for my viewers, next week I will definitely talk more about the exit strategy. Today we spoke more about the entry. The exit is really a very big subject by itself. Next week we will address that. Do tune in, see the video, give me your comments. I will be happy to help you. Signing off, stay safe. And as it is, our government is doing a good work. We're rolling out the vaccines next week. So let us hope for a positive and a good result. Till then, stay safe. See you next week. Goodbye. Thank you. Good night.